Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We are just moments away now from Jerome Powell and the FOMC report. It's going to be a big moment. We're counting down. There is the clock on the screen. I have got with me today Sensei. Sensei is with me. We've got a joint show today. We got a cheat sheet, everything that you need to be able to trade this event today. So stand by. We're just under 20 minutes ago now from the rate decision. Then we'll get we'll go through all the numbers. Sensei will do a reaction to that. We'll put everything together for you. We've got the cheat sheet in our newsletter, which everyone can get today at 50% discount because we're about to bring our brand new training course out and be part of the Discord village with everything around the newsletter and the training course. Very exciting. So I've got Sensei live on the show with me now. Get ready. It's going to be a huge afternoon this afternoon. I hope you're ready. Let's bring in Sensei right now. So good afternoon, Sensei. Lovely to have you here. Hope you're well, mate. You all right?
Yeah, thank you for having me on, Martyn. What a day it's going to be. We've started off with inflation data. Now we've got FOMC, and then later there's Japan. It's all going on, but the FOMC is front and center of it all.
All going on in one day. Absolutely right. We're going to go through all our cheat sheet information here. We've got lots to share with you. Me and Sensei are going to discuss it all live. Get ready for an explosive afternoon. It's going to be one hell of an afternoon. Be ready. Be prepared. Just under... Oh, hang on, that clock just started again. That's a bit weird. Let me just get rid of that. That's not quite working the way I wanted it to. I apologize for that, and I've just worked out why. Let me take that off the screen. I'm terribly sorry. That's not going to work. We know what the time is. When we reach the hour, we will have the rate decision for you. So let me bring Sensei back on. Does everyone tap the like button? In fact, I tell you what we'll do. 30 seconds on the clock. 30 seconds alone. We want to get 150 likes. It's going to be a huge afternoon. Tap the like button. Get ready. Big news. I just sold $80,000 of crypto and bought it back 1 second later. I'll tell you all about that in a minute. Believe it or not, it's not available in the UK. It should be illegal. What exactly was that all about? I'll tell you about that in a minute. But for right now, though, 30 seconds on the clock. I want you to get 150 likes in 5, 4, 3, 2, 1, go. Here we go. Everyone tap the like button. Let's get busy. Let's do it. Let's see how many people have tapped the like button already. We're starting off at 76. Let's bring it on the screen and see how many we can get up in just 1.5 minutes. Here we go. There you go. It's showing 19. Let's refresh it. Everyone tap the like button. We are just 15 minutes away now from a rate decision. 90 likes. Zoom in. We want 150 likes in 1 minute. We're going to bring you the rate decision, the analysis, how to trade it, all my live trades on the screen. Go, 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 go. I want to get to Sensei in the next 20 seconds. 150 likes. Let's refresh the screen. We are now at 90. Here we go. Let's go, 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 go. Let's bring it up. There's 112. 112. We're nearly there. Everyone tap the like button. There's 300 watching now. Everyone do it for me. We can get straight on with Sensei and discuss how we trade this and what I tapped it 5 times, says Troll King. I'm loving it, loving it, loving it. All right, okay. I'm going to give you 10 seconds and then we're going to move on. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Are we there yet? Are we there yet, Mum? Let's have a look. Let's have a look. 128. Very close. That's close enough for me. That'll do for me. Thank you very much indeed, everybody, for liking that. Much, much appreciated. Right. Let me bring Sensei right on the show right now. All right, you ready? Let me just stop this and go over to here. So, Sensei, what a day it's been today. We've seen just so much volatility. We knew this was going to be a dramatic event, but boy, we didn't expect Trump this morning to team up with Israel and start bombing all the gas and oil refineries and everything else in Iran. The very thing that we need, the very thing we don't want to get damaged because of inflation has now been hit today. The market sold off. You saw what what happened here this morning. And what I did, I sold all of my crypto and bought it back 1 minute later. Literally, we'll talk about that in a minute. Sensei, give me your thoughts. Would you like to go for the cheat sheet or the newsletter straight away? I mean, what do you think? We've got 15 minutes.
Let me spend 5 minutes showing everyone what we're looking out for in the next 15 minutes, because it's not only a rate decision, there's a lot there. So should I go full screen?
Yeah, if you go full screen, Sensei, that would be absolutely wonderful. Let's do that right now. Here we go. Oh, I'll take myself off. I can take myself off if you're in the wrong place.
Let me just... There we go.
Spot on.
Just teleported.
Very good.
Okay, so in about 15 minutes time, we're going to get the rate decision. We are quite confident it is going to be a hold. So that's not the story today. The story today is what is the SEP, the Summary of Economic Projections, what is the dot plot, and what is the statement that's going to come out. So let me show you on the cheat sheet. Right now, we are actually on extreme fear on the stock market. We haven't seen these levels in a very long time. Of course, we're still in the fear sector on the cryptocurrency. So the stock market is entering extreme fear right now. 5 things we're looking at tonight. Number 1, does the dot plot show 0 cuts, 1 cut or more? So very soon we're going to get in about 30 minutes time, we're going to get the dot plot. The dot plot essentially is where do the participants think rate cuts will be by the end of the year and going forward. So we're going to get that document. We're going to dissect it. I'm going to come on the show and tell you exactly what the rate participants, the Fed participants are saying. And if they're starting to say rate hikes, this is the rumor that we're hearing now, rate hikes. They're gonna be entering the market. And if Jerome Powell mentions it, or even if he doesn't mention it, but we see the Fed participants mention it, that's when we're going to have real concern, a real bloodbath in the market. Or is it not as bad as people think? We're at extreme fear right now. Has it already been priced in? And are we going to is everyone pricing in worst case scenario now after today's bad inflation report? And is Jerome Powell actually going to carve those? Let me bring myself over here. Oh, sorry, Martyn.
No worries. I beat you to it there a little bit. Never mind. I'll come back to where we were. Yeah, let's do that. Yeah. Okay.
Okay, there we go. Oh,
there you go.
I apologize. Okay, so those are some of the things we're looking at in about 12 minutes time. I'm going to bring the dot plot up on the screen. We're also looking at how Jerome Powell's going to describe the Iran war. Number 3, we're going to be looking at the PCE forecast in the SEP, so the Summary of Economic Projections. Where is the growth going to be? If we can scroll down to the first, if we go, keep going until you see, let's keep going. And there we go. So this is the rate decision. The number 1. Base case, 99% chance, it is a hold. If it is scenario B, which is the shock, that would be essentially a rate cut. And the reason that won't be good to get a rate cut today, it would show a lot of fear. Emergency rate cuts. No one's expecting it. Recession's coming. That would be a crypto dump of about 15 to 20% and a stock market dump of about 5%. And the same if we get a rate hike. If we get a rate hike, no one's expecting it, no one's hedged for it, it would actually be even worse. There'll be a liquidation cascade and equities will drop about 5%. The next thing we're watching is the statement. So there's going to be a statement coming out, and anyone who had the cheat sheet would already know all about this. The statement will come out. I'll be comparing the words in the background. That's coming out in 10 minutes as well. So we can scroll past all the statement bits because those will be reserved for the premium members, and that's what we're looking at for specific words. So we'll scroll past that until we get to the SEP, number 3, the SEP. This is where the Fed put together a data sheet and tell us where they think GDP growth is going to be. Right now, we're concerned about GDP growth coming down too much and recession. Number 2, we're going to see where they think unemployment's going to be. If they think unemployment's going up, we'll get rate cuts. If they think it's going to be fine, then we might get rates staying strong. And then we're going to see their baseline on inflation, PCE, and also we'll see where they think rates are coming. So in the next 10 minutes, we will get all of that data. We will digest it and behind the scenes, the dot plot, the SEP, and the statement, and I'll bring that to you. So be prepared for it. If you've got the cheat sheet, you can see it right now. But the story of the day is, are they going to start talking about hikes? What are your thoughts, Martyn, on all of this?
Yes, let's talk about it now. But before I give my thoughts on it, I want to give everybody the link to the newsletter so you can get the cheat sheet right now so you can trade it. As you can see, I've been trading this very, very successfully today. Look at all my crypto turn green. Absolutely fantastic. I'll tell you all about that in a second. We've got so much to share with you. But right now, I'm going to give everyone this link. In the chat right now is the newsletter. 50% off. Everyone can get the newsletter right now. And it includes our training course as well. We could sell this separately, but we include it inside of the newsletter. So there's so much stuff now in the newsletter. So many great things. If you get that now, it's the best ever deal. We've never done and we never will do a better deal than 50%. There it is right now in the chat for you. It's there it is. You got that? In the chat, there it is. It's sensei.news/50 off. That's what it says right there. Sensei, I've just realized that's the code from this morning. Is that still going to work for me?
Yeah, it'll work. I know we've basically, it's not going to be 3 people today. It's going to be about 10. I'll keep everyone up to date. Don't worry, it will.
Fantastic. I just wanted to make sure.
It will be more than 3 people today. So we're going to have 10. It will sell out by the end of the show. So if you want to get it now. You get the daily newsletter, you get the cheat sheets, you get the portfolio starting with 5,000. We're taking up to 100,000. We will get there. We've got daily calendars, the chart training course coming out next Wednesday. And you get the indicators that I'm using.
Sensei, if you could mute your overlay, please. If you could mute your overlay. There we go. We had it come through twice. We had a special guest on the stage there. Yeah, there we go. Special guest just said this is for the Nappy Fund and the Whiskey Wednesday, which we'll be having later on today. Anyway, thank you for that. So if you want the newsletter and the cheat sheet, you can get that now. We've got just 8 minutes to go before the decision. Now, let me tell you how I've done this today. I've been trading this and making money from this. If you want all my trades, it's all on Discord. And the Discord village, you'll be able to talk about the newsletter. Sensei goes in there. He talks and trades and shows you what he's doing and answers questions. And you'll see there's even going to be in fact, I'm not going to tell you about that now. It's a surprise about the training course. That comes later. But there is Discord if you want that. 90% discount on the Discord, just a couple of bucks, and you can get all the channels that support and surround the newsletter at the same time. Now, let me show you what I've been doing today. Something I only discovered this morning. This is the power of Discord. I had no idea this existed, and it should be illegal. Honestly, this Sensei was telling me this does not exist in the United States. As you know, I am in crypto, okay? I've got XRP and Ethereum. They were all down today on the shock of what happened today in Iran, with Trump supporting Iran bombing those oil fields. I still can't believe they agreed to that. But anyway, they did. The market shocked this morning. Everything dropped. Nothing to do with the FOMC report, because we already woke up this morning expecting a rate pause. Nothing really is changing. There's a chance now we might get a rate hike, but really everyone is still focusing on a pause. But with oil suddenly spiking, and with this sudden attack in Iran on the oil fields, the market overreacted. Everything went down massive. What did I do? Well, I shared it on Discord. I bought Coca-Cola. There it is. There's that drop, and I'm up on that trade. A defensive position, not free money, but I bought it anyway. Then after that, what I did, and I didn't even know this existed, I was down on my crypto, and everything went down 8, 9, 10, 12%. As Sensei has often said, you will see that crypto always goes down first. It will overreact first, and it did, all right? That's what happened. So we had this issue with crypto selling off. Okay, now I'm on Discord. We're having a Discord event, and I was talking to the team, and I found out, and I didn't even know this existed. You can sell in America, not everywhere. You can sell all your crypto for a loss, post it as a loss, and buy it back the same second. Now, normally it's a 30-day wash sale rule. And it should be, because you should pay your taxes. Hard-earning, hard-working people who just go to work, who can't buy all this stuff, they can't just get free money like this. It's crazy. I cannot believe America allows this, but they do. So they allow you on XRP and Ethereum, check your crypto. It's not all coins, by the way. Ethereum and XRP it is. We checked it. I sold it. I posted the loss. Now look at this. This is what it does. If I now go to my crypto, look here, and I show you my crypto position, profit and loss. It's a new feature. Look at that loss. $12,000 loss. That goes against all my profit and all the money I've made this year. So I get basically no tax bill. Thank you very much. Whoever made this rule up, I just should be in prison, really. I'm not being funny. It's wrong. And then I bought it back, and now I'm up on it. Isn't that mental? So at the end of the day, you know, if the market goes down and the asset goes down, you can't control that. You're down, but you're not out until you've sold it, all right? Well, normally when you sell, you lose money. In this case, if you sell and buy back at the same price, as it happened, I bought it slightly cheaper and it's gone up, you get the benefit of the new trade. I'm up on it and I've been able to claim tax back. Can't believe it. Sensei, can you believe this, mate?
Never heard of it. I mean, it's crazy. Here in the UK, there's a 30-day bed and breakfast rule.
Exactly. Yeah, we double-checked it, and it is accurate, and you can do it. Not on all coins, but Ethereum and XRP, you can do it. They're regarded as commodities. It's the same sort of rule. I've never heard anything like it. So we did that, and we had about 50 people in Discord, and everyone did it. Like, we literally caused the market crash today. It was quite funny. Everybody sold and everybody bought it back. It's absolutely bonkers. Right, we got 2 minutes 48. Thank you, Sensei, for the clock you got on the screen there. We are ready to go. We've got multiple sources. We can bring it to you on multiple sources. We'll find out who does it best for us, but we are waiting on CNBC, Bloomberg, and anybody else that wants to chime in. We are ready. Now, what's going to happen is this. Let me just mute that a second. What's going to happen is we're going to give you the rate decision. We are expecting the decision to be a pause, but of course, after this morning, we know Jerome Powell doesn't really like Trump very much because Trump doesn't like Powell very much, as we know. We've seen it. Sensei, one of your favorite clips, right, was when he patted him on the back wearing his little hat. Anyway, Trump said this morning on social media, why isn't Powell reducing rates? Well, how the hell can he? Inflation's going up. Inflation was up this morning. Now you're bombing the oil field, so oil's going up. How the hell can he cut rates in this situation? There's a chance he could hike today. I don't expect it. Nobody does, because he's not going to react to what happened today. Because I think, and my prediction, and the reason why I bought crypto today, other than the tax benefit, was I think Trump's going to announce tomorrow or the next day, literally by the end of this week, I'm done, that we've blown everything up. We can walk away and claim it as a win. Of course, it won't be a win. It's just you've blown lots of stuff up. He'll walk away. The market will rally. Crypto will go up. Donald Trump will make loads of money. I'll make loads of money now. I mean, I cannot believe it's legal. Absolutely bonkers. The market will rally, and then we'll address the real issue of real inflation on the next FOMC report. And of course, the yen carry trade tonight could unwind. We're not expecting that either, because tonight in Japan, they give their rate decision as well. So once we've got the rate decision and we expect it to be a pause, I would imagine crypto will rally, because crypto goes down first. We saw it react. We saw it sell off. I believe it's going to come back up. I'm going to make loads of money and then claim the tax back on it. Bonkers, but it is what it is. And then Sensei is going to go away, analyze the data, what it means, and then come back with the updated cheat sheet. We're going to go through it all with you, and then we're going to be there for the conference. Now, the conference is important because Powell will speak, and then we'll have all that reaction. Sensei will react to that, and then we'll get the press conference. Now, of course, at the end, the press conference, they're going to ask about oil. They're going to ask about Trump and all the rest of it. We know what Powell's going to say, but it's what he doesn't say and the tone that he says it. Right, here we go. We're just seconds away now, Sensei. Let's get ready to rumble. Where are we going to get it from? I think we'll go over here.
And what are their views on the employment market?
We'll go to multiple sources. We'll bring Sensei back on in a second.
Inflation's here today.
No questions about productivity at the same time that you do have inflation, but you also have the potential for more efficiency.
Crude has gone from in the 60s when the Fed last met, the morning of the last Fed meeting at the end of January.
Sensei, take your clock off the screen if you can, mate.
Off the back of a shock in the Middle East and a major rally over the past 2 weeks plus. The scores heading into this decision look like this. Equity markets this afternoon on the S&P declining by 0.6% in the bond market. market, we're looking at 2s, 10s and 30s shaping up as follows. Yields on a 2-year at 3.71. With that Fed decision, here's Mike McKee.
No change in rates, no change in dots, one descent, but some big changes in inflation expectations. Fed officials see one cut still in 2006 at some point, even though their statement notes that uncertainty about the economic outlook remains elevated. 3 members who favored no cuts in this year.
There goes Bitcoin as predicted. Look, I was right.
The statement goes on to say, the implication of developments in the Middle East for the U.S. economy are uncertain, and the committee remains attentive to risks to both sides of their mandate. They still see one more cut in 2027. Stephen Martyn, the only dissenter, he wanted a 1/4 point cut this time. Discern that he still wants 100 basis points at some point this year. The language about future moves remains the same. They still talk about the extent and timing of additional adjustments to the target range. It's the summary of economic projections in which we see a lot of changes. PCE inflation this year is forecast at 2.7%, up from 2.4% in December. Core is also seen at 2.7%, up from 2.5%. Both dropped to 2.2% next year, up from 2.4% in the December SEP. Core is seen at 2.7% this year. Both drop back, as I mentioned, next year to 2% in 2028. GDP marked up 1/10 in both years, both of the next 2 years, to 2.4% this year and 2.3% next year. The unemployment forecast remains 4.4% in 2026, dropping to 4.3% next year. That's up from 4.2% in December. And the longer run estimate for Fed funds, seen as the proxy for the neutral rate, rises a tick to 3.1%. Guys?
Mike McKee, thank you, sir. We'll catch up with you a little bit later.
There we go.
Price action.
Great stuff. I'm going to come back now
to sneak peek of what's happening in the commodity market because we're tracking that throughout the day.
Where the center of the board is on the ultimate impact of the oil price shock. Guys?
All right, Steve, stick around here, please, because
I'm going to come back to Sensei a moment. Here we go. So, Sensei, we've got a pause as expected. This is great. You can see already our portfolio is coming up, and you can see that crypto is coming up with it. That's why we traded it. Look, we're at 1.8, 1.65. We took the loss. Now we're going up. This is fantastic. What a great situation that was. You bought the dip. You bought the overreaction. It had nothing to do with the rate decision. We knew we were going to get a pause. Now it's going up. Sensei, what's your first take on that? I know you're now running this through your models and putting it all together.
Yeah, so let's go through some of the headlines. So you're right. Obviously the Fed has held. It's actually a bit more dovish than expected. What we've got is the dot plot. Everyone feared that the Fed's dot plot would suggest that there's going to be no rate cuts. There is still the median that there is still going to be one rate cut. They haven't changed it too fast, but we know the Fed moves slowly. They don't like to make knee-jerk reactions. What is interesting, Fed Waller. Fed Waller is the Fed official that loves interest rate cuts, that loves crypto. He was the loudest dove. He joins the hold cap, leaving Miran as only one person now wants rate cuts. So anyone who's in this chat going, Jerome Powell is cutting too late, Jerome Powell should be cutting rates, and when the new Fed chair will be coming in, he's going to cut rates. Well, unfortunately, if you think that way, the new Fed chair will come in not next FOMC, but the FOMC after. But the whole of the Fed wants to pause rates. There's only one person who wants to cut rates, and if there's only one person and the new Fed chair, that's 2 votes. That's not going to make them cut rates. So, Fed Waller flipping from wanting cuts to joining the hold camp. We've got Iran war. That's now actually been put into the FOMC statement for the first time, and they say implications are uncertain. Core PCE forecasts. We've got inflation forecasts. They've been raised. Remember, in the summary of economic projections, which we've just got out, they give projections, and they've raised their projections for inflation up to 2.7%. It is hawkish, but it's less than what was priced in. Wall Street was saying maybe they're going to put in about 3% in their summary of economic projections. Let me give you a few more things that are some of the headlines from what we've just got. The next one is the dot plot median. So this is where we thought interest rate, this is where the Fed officials come out and say, I think interest rates will come here. And we were worried that there was going to be no cuts and they were going to start projecting no rate cuts. The one rate cut survived the war. So the Fed are still pricing in one rate cut, and that's after all the information from the oil shock and the PPI and inflation. GDP has been upgraded, even though we've recently saw GDP come in under. It was supposed to be 3.4%. We got, I think it was 1.4%, and then the revision was 0.7%. They've upgraded it, and they're saying GDP is actually going to be 2.4%. So the Fed is more optimistic than the data is suggesting. And they've also said the wording of somewhat elevated stays in there. So the Fed refuses to harden inflation language. So we've got inflation going up. We've got PC at 3.1%. We've got inflation shocks every time we cover data. But the Fed is not suggesting they're panicking, because they've kept their language the same. They've used the words somewhat elevated. They haven't said we're very concerned about inflation. Maybe that'll change when Jerome Powell takes the stage, but they've used the same wording. No hikes in 2026. The rate cut scare is now officially dead from what we've seen in the dot plot. Not one single person is suggesting rate hikes this year. And the final 2 points would be neutral rate creeps up to 3.1%. The Fed quietly signals rates are never going back to pre-pandemic levels. The neutral rate, the rate that we think that the interest rates will come down and support the economy and support jobs, is going to be about 3.1%. It's not going to be near pandemic lows. Gone other times you can get mortgages under 3%. That's not happening. And the final point is additional adjustments saying cutting bias is intact, hikes not on the table. So a bit more bullish than what Wall Street was saying, than what we may have expected. But I know, Martyn, you were sort of expecting something like this, weren't you?
Yeah, this is why I'm all in. This is why I'm all in and never leave the market, even if it was for a minute today, and back in again with those tax lots, with those lots, tax losses, and then back in again. Yeah, I mean, I couldn't be more bullish. Let me just show you my position, guys. So this is me. I'm 100% back in again. If you look at my stocks position, I'm at 450,000 plus the 50,000 on my Roth IRA. I'm all in. I'm all in with cash. I'm all in with margin. This is my buying power. I've got some buying power now, but 219 margin plus outside funds. So it's about 400,000, in nearly $500,000 now in margin with outside sources, which I borrowed from Lloyd's Bank and Bank of America. And these are my positions. I sold crypto today purely to get a loss and then bought it straight back. It's a one. Look at that. Look at that. $12,000 of losses to go against the tax. So I pay sod all, and then I bought back in, and I'm up. And I told you it would rally. Now, why is this? So we're right again, folks. It's another win, and this is a win for the Discordians. This was done with all the information that we had together. About 50 people today were negotiating this trade, and everybody traded it with me, and we all win. We all won together. This is what my thesis was, and I'm going to discuss this now because we've got time. We've got 20 minutes. Sensei, fantastic, has the clock on the screen. Great work there, Sensei, by the way. Spot on. So what we did today is this. You can sell, and you need to go and check certain crypto, not all. XRP and Ethereum, go and check it, is allowed to be sold as a commodity, right? The same way as a commodity. You can sell it and buy it back without a 30-day wash rule. Stocks, you have to wait 30 days. And of course, that's difficult because how do you manage that? Sensei, if you could just drag the clock in slightly, that's spot on, mate. You're on it already. If you can if you could do a crypto like that instantly, you don't have to guess about it going up or down. Now, remember why I owned crypto in the first place, because at these levels, I can see $3 to $5 for XRP, and I can see 4,000 for Ethereum. Okay, makes sense. So when it had a shock today, why did it have a shock? Did XRP and Bitcoin and Ethereum suddenly become less valuable because we're bombing oil? No, it's probably the least most affected by oil. In one aspect, it's the most, because it's a speculative asset. People fear, worry. They say, oh, I love XRP, I love Bitcoin, but the moment there's anything going on, everyone dumps it, right? Oh, we've got a special guest. Let me just read this out. Special guest on the stage. Thank you, MX Cheetah.
MX Cheetah tipped $1.99 through Super Chat. Appreciate the work today, boys.
Thank you very much indeed. We appreciate your support with the Super Chats. Anyone can have their voice on the show. Thank you. So The model and the reason for owning crypto hasn't changed, right? It doesn't need oil. It doesn't care about inflation other than liquidity, people buying it. It's separate from all of that. At the same time, it's also connected to all of that because people get fearful. But if you're not an emotional, fearful trader like I am, I just buy value. I don't care what traders do. I don't care whether you get liquidated or not or you borrow too much money. All that stuff doesn't bother me. The asset is still the same asset. So this morning, it sold off because of what happened in Iran today. So I didn't even know this part of it. I could have just stayed there and gone back up again. What I decided to do after I spoke to my Discordians who told me about this, I didn't know, you can sell it. We checked it, we verified it, and you can buy it back instantly. You can post a loss and now you start making money again. Now don't kid ourselves. We haven't actually made any money because we're already down on it. And you can always remind yourself of that because if you go to the individual asset, you'll go, oh, look at me, I'm getting rich. Look, I'm up $700. Look at that, look, $700 in an hour on XRP. How clever am I? But hang on, no, you're not. You are on that trade, absolutely you are. But if you go to crypto, the overall position, that is what counts. You can actually see my overall crypto position. I'm trying to get to it. Here it is. Hang on, I'm not showing the right thing. What am I doing here? Where's it gone? Oh, there we go. No, I'm still bloody wrong. Where's my bloody crypto position? Why am I not showing the whole thing? This looks weird. Something's reset. What have I done? I'm in profit and loss. I don't want to be in profit and loss. I want to be in crypto. No, I still can't do it. My brain's frazzled. Oh, there we go. That's what I was trying to do. There you go. I'm down $4,000 on crypto today because I went down, right? I lost money. I've bought back and I'm making it back, but my overall position is still down today, all right? I've not got free money. What I've been able to do is do a tax loss so I don't pay tax because it will go against my tax. And what I've been able to do is buy it back so it looks like I'm up. I'm not really up, but I am at the same. It's very complicated, all right? I understand that. But I was very bullish on the asset. So I bought back the similar size to what I had before. But as far as stocks and shares are concerned, let me show you there. We sold the S&P in October. I told everybody we'd reached a peak, and we had. We went sideways until March. I was right. And we're not chasing this. This can go a lot lower later on in the year, and I think it will. SGov, we're out of SGov. We're not sitting in cash. We want to be invested. But Coca-Cola, we've made $40,000 on this trade when we went from the Snap deal, everybody feared, was $68 to $81. We predicted $80. It was right. We took money. We're now buying it again. And you want a defensive position. And you can see I'm down, but it's 19% of my portfolio at the moment. There's Coca-Cola. But my two biggest trades. Oh, we've got a special guest. Let me just read this out. Yes, indeed.
At Chip Gaming 9292 tipped $1.99 through Super Chat. Just remember Sensei stopped us from getting a plane.
Yes, he did. Sensei stopped us from getting a plane. Yesterday, we released a $2,000 a month Discord plan for the elite members, and it comes with a once-a-month trip from Dallas DFW to London and back to my house, and we're going to have Vaz on the plane, dressed as Elton John, in a dress, serving ice cream on a stick. And Sensei came in, and he poo-pooed it, so Sensei is banned from the plane, and you're right, Sensei stole our plane. But don't worry, we're buying another one, and it's going to be great. Yeah. No comments to that, Sensei? Not really. No.
Sorry, guys.
No. Yeah. So anyway, our biggest position is Google. We got 300 grand with the Roth IRA and the main account. That's one we know is going to go into $400. And Nvidia. Look at this one. You can't take it down even on a day like today. Bank of America, $300 target. I'm giving it $250. So I want to be in the market. I buy value. Don't buy sexy. Don't buy hype. I buy value. And today we saw an overreaction. I mean, it wasn't necessarily an overreaction. It was a bad thing. But did crypto suddenly become less useful? Did crypto suddenly have a problem? Fundamental, is it broken? No, it hasn't. It was an opportunity to buy. And now I know about the tax position where I can sell and buy back. I'm very, very happy. But just don't kid yourself. I haven't made real money. I've made money on this trade, but overall I'm still down. But I do have a tax loss, which will wipe out my tax, which gives me more money to invest because I haven't got to give the tax man any money. And this is a service that's available in the US, not available in the UK, as Sensei was telling me. I think it's wrong. I think people should pay their taxes, but you know, they say America is the land of opportunity.
You have to take advantage of what you have.
Exactly. These are the rules you've got. Take advantage. Like I've got an ISA in the UK and an IRA in the US because I'm a citizen of both, right? Take advantage of what you've got. Absolutely right. So, Sensei, give me your thoughts now. Just before you do, we are giving you a 50% discount today on the newsletter. It's our best ever deal. There it is in the chat for you right now. I'll post it twice so you can see it pop up. Someone just said, "Holy crap, Martyn, your portfolio's exploded since I last saw you." Yes, it's $700,000 now invested. I told you I'd get to $1 million by the end of the decade. We are way ahead of that without me buying anything. Yeah, 700 grand is my total portfolio with all the Roth, with all the margin and everything combined. That's what I've currently got invested. Yes, thank you very much. We're doing pretty well. We've not lost on a single trade. Apart from today, we sold for a loss on purpose and it has been marked down as a loss. There it is. 233 trades, 227 wins. We lost today. Was it a loss? Yes, it was. We've got to be honest, but it was on purpose and it was done for a very good reason. So I'm very bullish. What we heard today from the Fed was, like Sensei said, relatively bullish, but don't get excited. We're not going to have rallies. We're not going to have XRP explode today. Liquidity is tight. We might get one rate cut. That's what we predicted. I've been saying for a year, one rate cut, as did Sensei, by the way, one rate cut in 2026. So there we are. Anything else would be a gift at this stage and constitute a rally because it would be a surprise the market is doing better. Right. So if you want the newsletter, it's 50% discount. Now, we're very excited because this week we launched the training course, okay? It's a product that we could sell. It's being included in the newsletter. And we've got our Discord community as well, where we are live 24/7 with stage events twice a day. Sensei is going to be taking an active role in Discord. He's going to be sharing some trades. He's going to be discussing his newsletter. He's going to be discussing, because he's got a portfolio challenge, 5,000 to, what is it, Sensei? What do you want to get to?
100,000. Let's get
100,000
first.
That sounds good. Maybe you could race me to 1 million, mate. Maybe. I've got 300 to go. Anyway, so you get on. Anyway, we got that challenge. All of that is happening, and you can get the newsletter or Discord, and both are all combined now in a village. So if you want Discord, there is a Discord. You'll get all of my trades, and you'll also see Sensei active in there as well with the newsletter channels, because you can get the newsletter, come into Discord, discuss it, ask questions. You can ask me, ask the team, and I'm live. You can access me 24/7, and I mean 24/7. At 3 o'clock in the morning, I do a trade. You can speak to me 24/7. I'm available. It's the only way you can access it, and it's 90% discount. A couple of bucks is all it costs to be on Discord, and now you get all of this wrapped up in one. Wonderful stuff. Right, as you can see, we've got 11 minutes and 17 seconds before the conference. Okay, Jerome Powell is going to come on stage. He's going to deliver what we already know. Nothing's going to happen too much, but his tone is important. And the conference at the end is when the real action occurs. That's when he will talk about oil, because people are going to ask about Trump. He's going to say, I can't get into politics. We know what he's going to say, but all of that. So, Sensei, over to you now. What are you, you're going to, if I'm right, you're going to analyze this as well and come back with extra information, right?
Yeah. So just like we did right now with the summary of economic projections, I'll be deep diving into his transcript, and you'll be analysing his tone, and we're going to come back together at the end of it. So don't go anywhere as the press conference ends, because we need to analyse it. And again, the first move's not always the right move. So we'll come on to that. But just as a recap for anyone who's just tuned in, we are now 10 minutes away from Jerome Powell taking the stage. This is his second to last press conference. In the last 20 minutes, we've just got released the rate decision. It is a hold as expected. We didn't want it to be a cut, and we didn't want it to be a hike. Otherwise, the markets will be crashing about 5% right now on the stock market, and about 25% on the broader market, on the crypto market. So that's great. Rate decision, hold. We also got two other big bits of data. We got the summary of economic projections, which showed us a dot plot. The dot plot suggested that the Wall Street thought that the dot plot would change to rate hikes or at least no rate cuts. In fact, the Federal Reserve and the committee have kept it exactly the same, essentially. The terminal rate came up a little bit, but they've kept it the same. They've said one more rate cut this year. So that's what we're expecting, or that's what the data that they've said.
Sensei, sorry to interrupt you. I want you to carry on. Well, Sensei's talking to you and giving you his thoughts. There are people wanting to come into Discord. Once you come into Discord, you can access me 24/7, see all my trades. I post them all before I do them and as I do them. We've got the casino. We've got our Luca coin. We've got Sensei will be in there with his newsletter, chat and everything around it. The training course, all of this wonderful stuff you'll see over there. And if you'd like to access it right now, I'm onboarding people as Sensei is talking about his thoughts. So if you come in, you are presented by an interview. It takes 8 minutes to go through it. You have to watch a video very, very quickly. It'll give you a few questions. It gives you all the information around how Discord works and how to secure yourself and make sure that you get the best out of it and don't get scammed by anyone. That, most importantly, security. And then you answer a couple of questions I ask you in the video. You then have a couple of minutes once I've then allowed you in, because it's only appointment only and we only select a few people. Once you come in, you then have a couple of minutes to choose your membership. Most people, I will tell you, go pro. You get 1,000,000% more than you do with the standard, but some people just want to pay a couple of bucks. You can choose what you want. You have a couple of minutes to get in. If you don't choose a membership, we kick you out because we'll assume you're trying to scam the service. Sensei, back to you. I'm going to onboard people now in Discord. Thank you.
Yeah, brilliant. Everyone should definitely, Martyn, I think you should put the Discord link again because it's too many people have talks, so we can't see the Discord link.
There we go.
Yeah, so everyone should definitely, go grab the Discord. I mean, it's literally a few bucks a month, and you get access to the whole community, all the trades, all the fun. So yeah, go check it out. So yeah, what have we just got? 20 minutes ago, we got the SEP, the dot plot. The median held at one cut. The average median held at one cut. What else did we get? Inflation forecasts were raised, but not as badly as feared. So the Fed, again, the SEP is Summary of Economic Projections. It's in the title. They're projecting the economy over the year, and that obviously matters for interest rate decision. The PCE, the Fed's preferred metric for inflation, they raised that projection from 2.5% to 2.7%. You might think, wow, that's bad. Yes, it is bad, but it's not as bad as the market actually thought. The market thought we might get that raised to about 2.93%. Headline PCE got raised from 2.4 to 2.7, up 0.3%. And they are reflecting oil in this because they are taking into account everything. These are projections. Inflation is still seen reaching 2% by 2028. So they are still forecasting that inflation will get to 2% by 2028. The Fed is essentially saying they think this spike is temporary, it is short-term noise, and it's not permanent. So that's the Fed's views on inflation. I think Jerome Powell will probably say the same views, but they did add something for the first time, which was interesting. I've gone through the documents now, and this is new in their statement. They've said the implications of developments in Middle East for the US economy are uncertain. And you know how much the Fed and the markets don't like uncertainty, but we've got uncertainty, and the Fed have addressed it in their statement. They've said, to quote, the implications of developments in the Middle East for the US economy are uncertain. So this is the first time the Iran conflict is explicitly referenced in the statement, but they call it uncertain. They don't say something that could be worse, something like inflationary or persistent. They are framing it deliberately neutral. They are not saying the war is driving inflation. They are saying they do not know yet what it will do. That's kind of dovish because they're not jumping to conclusions. They're not certain that this is going to be causing inflation. If they were certain and they thought that it's going to have a big impact, they would say it. But they're being careful with their words. And I think Jerome Powell's going to be very careful with what he says. Maybe he'll slip up, maybe he won't. And that might be what will cause the markets to move. So we're 5 minutes away now.
Yeah.
There's more that was in there. The only thing I'll look out for now, and I'll pass it back to you, Martyn, is what to listen out for from Powell is how does he explain the GDP upgrade? Because we've had an upgrade in GDP, even though we've seen GDP go down. the Federal Reserve has upgraded GDP forecast, which is great. It means no recession, but how are they going to explain that? How is he going to talk about the Middle East? In the statement, it's uncertain. Will Powell be saying something a bit more a bit more directional than that? We'll see. Why did Federal Reserve Fed participant Waller flip from being an ultra dove to being to holding rates? When is the first cut realistic? When does Fed project to see a rate cut? Of course, he won't say it, but what he says will allow the market to decide when that is. And why did they raise the neutral rate? Remember, the neutral rate is when it's going to end, where interest rates are going to get to and stall out to keep the economy in balance and jobs in balance. It was raised from 3% to 3.1%. So we'll keep an eye out on all of that. Again, I will come back with the analysis of what Jerome says. We'll give our thoughts. So stay around for the debrief at the end of Jerome Powell. He'll be speaking in 4 minutes. Go grab the deal on the newsletter. We don't do deals like this often. We won't be doing it at this price again. There will be a price increase next. I know Martyn doesn't increase his prices, but I do. So next week.
And that's all right, mate. That's all right, mate. You keep adding new stuff. I'm just the same old hat, the same all the time. Nothing changes with me, mate.
No,
that's how it is.
True, but yeah, you always add things. So it makes me look even worse. But I don't care, guys. I am going to be raising the price.
He's right there.
Next week, and the discount won't be there. So next week, next Wednesday, the training course is out. The training, the indicator's out. Everyone's been seeing behind the scenes of the indicator, and it is crazy what it's been able to do. So the indicator's coming out. The training course is coming out. It's just a 2-hour video. It's not like other people's training courses. We're doing it based off academic research. I'm doing it based off 8 years of research. I'm just doing it not as an additional course. It's part of the newsletter. Also, you get the portfolio challenge. You get the daily news stories and the deep dives and the cheat sheets like the one for the FOMC. You get the net worth tracking tool. You get so much. And right now, it's essentially $9.99 a month, or 20. I think it's about 30 cents a day, $2 a week. You get it on the annual plan, 50% off. There's only 10 spots available today. So once they're gone for today. The link is in the live chat. Go grab it while you can. 2 minutes now until Jerome Powell takes the stage.
Fantastic. And then once you've read the newsletter in the morning, of course, you can discuss it with the Discordians and the Lucasades in the Discord village. Yeah. You'll see Sensei pop in, talk about it. You'll see me trading live. I'll be sharing all my trades with you. I've just had 8 people apply for Discord. I've sent you the video. Please now watch it. Once you've watched it, I'll know you've watched it. Then just give me the responses. I'll let you in, and then you have a few minutes to choose your membership. If you don't choose your membership, I will kick you from the service. That's not being rude. That's what it's called on Discord. If you're just sitting there and you get removed, we don't want millions of people just sitting around doing nothing. All right. Okay, we got 2 minutes to go. Thank you, Sensei, for that great analysis. The newsletter has really helped me today. I mean, because of your support, understanding crypto, you brought me to XRP, in fact, crypto completely. I now understand the actual value. It's difficult to assess it like I can with Coca-Cola and Google and Nvidia and stuff like that. But at the end of the day, when it went down today, it was a gift. And I didn't even know about the tax situation on that, so that was great. But to be able to buy back today, knowing that, understanding more of the value of where I see it going, because the plumbing is built into the system, as we know now with XRP and Ethereum. I know that firsthand because I've spoken to the people that are building the network down in Dallas with the data centers and the brokerage and so on, the exchange. I understand now the value. So today didn't scare me. It just went, well, that's great. I can buy XRP and Ethereum at an 8% discount. That presented opportunity to me, unlike those speculators and gamblers like Tom Lee, who just keeps every 5 minutes Bitcoin's going to be 200,000 by the end of the month, and he just keeps changing it. I don't care about when, I just care that it will. So all I have to do is just buy it and accumulate it and trade it like I'm doing to improve my position. Right, we got 30 seconds to go. We're going to listen in now. It's now time for the FOMC. I'm going to let Sensei do his thing. Let's get ready to bring Jerome Powell on the show. Here we go. Stand by.
Millions of more immigrants coming in.
We'll be showing on the screen the different commodities, different assets, crypto stocks. We're looking at my overall portfolio, the S&P 500.
Right. So your final thoughts here. What is the
Let's get ready to go.
Get for it to kick back up into real growth again?
Well, I think we want to start seeing those cuts price back in. And I think it is going to be a hawkish pause today, but I think the market's going to look through that a little bit because they know we're getting Kevin Warsh here in July. And it's
here we go.
Different.
All right, here we go. This is Fed Chair Jerome Powell taking the podium.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Okay, here's the most important part.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%. And some big chunk of that, between a half and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut, and each person has individual, stories behind what they want to do. But essentially, it is that the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
The consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. We don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And you also, what you've written down before you'll be reluctant to move too far away from that, just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid. And inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing, pretty well. It's just we don't know what the effects of this will be, and really no one does.
Mr. Chair, in the past, the staff has suggested that higher oil prices.
I've just bought $10,000 of Coca-Cola.
But that's
if anybody clips that, they will win 100 Luca coins on Discord if you're the first person to do it. Live trade, $10,000 Coca-Cola.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, your question was?
What the staff is saying about, and has said in the past. About
so there'll be an offset.
Offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable, and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned,
another one. I bought
$10,000
of Google
for an extended period, meaningfully higher. So
there it is, $10,000 of Google. You can clip that and win 100 Luca coins in Discord.
Now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment, and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that, having looked through tariff inflation and inflation running above target, and looking through the oil price shock, would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully. But of course, that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations.
I've just bought another $10,000 of Google.
We are
there
very
it is
strongly
on the screen. If you clip that, you win 100 Luca coins.
Doing what it takes to keep inflation expectations anchored at 2%. And, I think it's important that we do that. Very important.
Nick.
Nick Timoros, Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system. And we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be, for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, and so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks. And we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Labor non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services. But we're not seeing progress there. So we do, what we expect for next year is continued. What we want to see for this year, rather, is continued progress on housing services. Finally, seeing that the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%, PCE has ticked down overall.
You know, it's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and, you know, in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, you know, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you know, you can we're at 3.0% core inflation, 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time. And that's a concern. You know, we need to get back down to 2%, and we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet. And I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent would you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and so and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years: COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common? And does the central bank need to start taking account of the risk of supply shocks as a more common problem?
We did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy that the possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
It was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing, that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long, the current situation lasts, and then what are the effects on on prices and then how do consumers react and that kind of thing. Really, I wouldn't speculate.
Another
in any way, and
trade.
there's
I've just
really
bought
not a lot we can do
$8,000
other
of
than
VU, the S&P
watch and
500.
see.
I bought back into the S&P 500, $8,000.
Afternoon,
Very nice.
Powell.
That's my trades done for the day. If you share that, you'll get 100 Luca coins on Discord
of
for
inflation
doing that in the YouTube
reflects
clips.
confidence that the Fed will get back to its 2% goal. But there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you know, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of, you know, of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that you know, we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were like discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there is tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. You know, when we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's, you know, 1 percentage point above that. So calling that stagflation, it's not, you know, I would reserve the term stagflation for, you know, a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, you know, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case, we're going to learn a lot because we're going to learn 6 weeks to the day till the next meeting. And, we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023 when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I mean, I think the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing, as our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history, and then they've built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc, and for all the tariffs they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases, and we should start seeing that more and more in the middle parts of the year. We do expect that.
This is why I've been buying, folks. I like this.
Though, that the level of
I've been buying
tariffs came down.
Everything's turning green
in the wake of in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Hi, thank you. Chris Rugaber.
We've still got Sensei with us. He's going to be doing analysis in a moment. He's still here, look. He hasn't gone away.
I wanted to ask about...
We're doing great. We're doing great.
An additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. You know, it's your opinion at a moment in time, which can change based on events. You know, sometimes very quickly. So it never locks people in. You know, people are more than happy to be proven wrong in either direction. And so I just think we do it. And, you know, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But, you know, we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt because subject to just very high levels of uncertainty.
Brian.
Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, you know, there were big price increases all around the world, by the way, everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic. And everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not.
I'm going to tell you in a minute why I'm feeling really bullish.
Good about it yet. And it
really
will take
bullish.
some years
and I've just
of
bought
positive real
I'll show you in a minute.
For people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed. And you know, there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and you know what it does for us is, you know, makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and you know, stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States, anywhere in the world, in a market economy, in a democracy, and you'll see, you know, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or specific answer on the first question. You know, we're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. You know, in terms of diesel prices. So your question there is, are we concerned about it? I mean,
how concerned, and whether or not it will drive up the cost of food and other goods that really rely on it to.
So I
move
think
across the
it's a
country.
more general concern than that. It's diesel prices because that's transportation of food and things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many, many things. So, and those, there are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but we're right at the beginning of this, and we don't know how big we just don't know how big this will be and how long it lasts. It may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see. Thank you.
Archie, for the last question.
Last question, folks.
Thanks very much.
Stand by, Sensei.
Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the SEP and noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. We actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago, and that's not because of generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity, and by the way, expect it to continue. And we haven't really started to see the effects of generative AI, and that should certainly contribute to that. So it's quite unusual.
Can I give you all my thoughts, analysis, all my trades, all my positions, everything?
Incomes to rise
Live
over time.
Q&A for everyone. Stand by.
So it's a great thing. Was that your question?
Yeah, no, I was just curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot, this is a sort of disinflationary story, and if you believe that productivity thing, that should also weigh down on inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you should think about where the rates?
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on
Diesel Raider, you need to choose your membership on Discord. You're about to be kicked from Discord.
So that's actually
it's been an hour now, and it kicks you out if you've not chosen membership.
In addition, it probably raises the neutral rate. So in the near term, you're looking you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, it can be if it's expanding potential output, which is what higher productivity does, then it actually can be. But I think it's an empirical question because it's really what is the demand growing faster or slower than the supply side, and I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
Right, give my thoughts, reactions to all of that. We've got Sensei waiting to join us in a couple of seconds. So I'm going to give you a few minutes of my thoughts. Then Sensei is going to do a post-event deep dive analysis. So first of all, I'm going to just go through everything once. So pay attention, folks, just once for each thing. Please tap the like button if you've enjoyed this show. By tapping the like button, it's more likely to be shown to you next time. Thank you. It helps the channel. Consider subscribing as well. That would be absolutely wonderful. By clicking subscribe, you're helping us along our journey. We hope to be at 500,000 this year, 1 million next year, and 1 billion in 13 years. And I am working 12 hours a day to make that happen. Here is our subscribers today. Look at that rolling around. Thank you so much indeed. That's the live, real thing happening there. Thank you so much for that. During that session, I've been very busy trading. All of my trades are shared for you on YouTube. Electrum, there is my YouTube membership there. Membership never goes up, no inflation. It's the minimum we can charge on Discord from YouTube from $2.99. We have the lowest membership, never goes up in price. We add new membership levels, but there's no inflation and your services get added. We never take anything away. So you might want to get that. Also, Discord, my trades are shared 24/7 if you are a pro member. Just a few bucks a month. It'll never go up in price. 90% discount, no inflation, and there it is. And now you can, we're now giving you as well all the newsletter community, a whole village of stuff. We've got a games channel where we have fun with our own Luca coin. I share all my trades with you, 2 on-stage events a day. I'll be in Discord tonight for Whiskey Wednesdays. We'll have some fun afterwards. That's what you've got there. We've also got the newsletter. Today we're giving 50% off because we are celebrating our training course, which we could sell separately, but we're going to bring it to you on on the newsletter, and you will be able to interact with it as well on Discord as well. So there you go, 50% discount. There's, I believe there's 6 places available. We started with 10, 4 have now gone. So now I'm going to mention it. The last 6 will go really quickly. They always do. So if you'd like it, 50% off. It now includes the training course. It includes the wealth management. I forgot the bloody name of it. Sensei will tell me in a moment. What's the word, Sensei? The wealth, what is it?
Net worth tracker.
That's it.
You can call it whatever you want.
Net worth tracker. That was, I couldn't remember. Net worth tracker, plus many other things. And Sensei also is going to provide services on Discord, answering questions, sharing trades like I do. So there's loads more coming, nothing taken away, more added all the time. So that's about that. Now let me share you my trades today. What I did, and I shared it all with everyone on Discord, Electrum, live on the shows, and it's all posted. I sold all my crypto today and I took a loss. That now gives me a tax refund. There it is, 12 grand. That's nice, isn't it? All this money we're making. I learned about that for the first time today. I wasn't aware that XRP and Ethereum, you could buy it back immediately and post a loss. I think it's bonkers. It should be illegal, but it's not. It's allowed. Absolutely fantastic. So there we go. There was my loss. And then I bought it straight back and now I'm up on it. So you can't control where the market goes, but you control what you do. So whether I'd stayed in or sold it, the market would have been down or up. As it turned out, I sold it. I got a $12,000 tax loss, which is just mind-blowing. I bought it back slightly lower and I'm up. Why did I buy back crypto today? Well, XRP and Ethereum is my position because the fundamentals did not change. I've got 60 grand now in crypto. I've reduced it slightly. It was 80 for the reason I'm about to give you. So I bought back and I'm up on it and I've got a tax loss. That is perfect. Perfect trade, wins. I post it as a loss. I gave you the loss here. Technically, it's a loss, but not a loss as in I've lost money. I've simply bought back at a lower price and got a tax benefit. So it's a win. Oh, star guest. Let me just read this. I want to go through all the trades and we got Sensei deep dive analysis. Here we go. Let me read this.
Adjiko Veleko tipped MX $100 through Super Chat. Margaritas for the dynamic duo.
Thank you very much indeed. And today's stream is shared with me and Sensei, so it will be shared, literally. Thank you. We'll have a margarita on you. There we go. Sensei will be thanking you in a moment when he comes back on screen. All right. So there's my position. So we've won today. Even though we're down today, we're up now on XRP and Ethereum, and I bought it because the fundamentals did not change. That was caused by macro conditions. How the heck does oil and blowing up oil fields make any difference to XRP? It does from a perspective of traders and fear and selling out of the market, but the fundamental hasn't changed. So I bought it back immediately, got a 12 grand tax loss, and we're up on it. Hurrah. Now then, the rest of the money, the other 20 grand, I did not put back. I had 80 grand in crypto. I had some more money. What did I do with it? Well, what I did is I brought it back into the market. Let me show you exactly what I did. I bought back my XRP, I bought back my Ethereum, and during today's show, live, while people have been posting it in Discord, I've been giving 100 Luca coins away for those that have been posting it. I bought back the S&P. What did I tell you? The S&P topped out in October. I would not buy it back. I would sell it. I sold it. It went sideways to March. Then it went down. Then I started buying it. It was the right thing to do. Dollar cost averaging and sitting in the S&P would have been a stupid idea for 6 months. Absolutely stupid. While I was making 40 grand on XRP, trading my lots on my crypto, making money, I was able to make more money and buy it back now. And I've just started buying it back because that's the place I want to be. I want all my money in the S&P, really. Ultimately, as I make profit, I'll start buying back at the right time. So there is my S&P. I'm back now buying the S&P, and I have got $20,000. I had $10,000 this morning. I've now doubled it, and I'm down $39. We're buying it back. And remember, it comes with a dividend as well. Extra little bonus. SGov, we're out of that. That's scared money. That's money where you park it when you need to. We're not parking money now. We're taking advantage of all of this. Coca-Cola, I've been buying heavily in Coca-Cola today. Going down, we already made 40 grand on it. I've now got $109,000 in Coca-Cola. We have got the dividend being paid. We got the dividend being paid out. There it is, $633. That's coming to us on the 1st of April. We've now got a lot more. I'd like to get $1,000 a month in dividends with this. We're down 2%. No problem. We made 40 grand on it, so it's free money anyway. All right, so there we go. We started buying more because we know now that Coca-Cola has an $87 share price this year, $97 next year. There we go. There's Coca-Cola. Google, special message. Let me read this. Sensei is on standby, and I've got more for you. Don't go anywhere. We've got 5 newsletters left, just 5 left. There's the link. One more gone.
Great jobs, guys.
All right, I'll tell you what I'll do. For my last 5 people, I will also give you 1,000. No, I won't. I'll give you 5,000 Luca coins as well. And you can trade these for opening up new channels. You can trade them for merchandise. You can trade them for free newsletters in the future, training courses, all kinds of perks and benefits. I'll come on to that in a minute. The last 5, we've got 5 left. Let me give you the link to the newsletter. If anyone takes it, 50% off. Plus, I'll give you 5,000 Luca coins as well. Another special message. Diesel Raider, you've got to be quick. You're about to be kicked from Discord. You need to upgrade your service now.
At Diesel_Raider tipped $1.99 through Super Chat. Did I make the cut?
Did I make the cut? Let me have a look. Did you upgrade in time? Let me have a look. Diesel Raider, yes, you are now a pro member on Discord. If you send me a friend request, let me have a look. Yes, send me a friend request now. There's the link. I'll accept it. And you are a pro member, the highest level service. Send me a friend request. You can DM me 24 hours a day and you can get my trades 24 hours a day. Yes, you are in as a pro member. Congratulations, Diesel Raider. Awesome stuff. And you can now, if you get the newsletter, 50% off, win 5,000 Luca coins as well. Right. So there's Coca-Cola. Google, one of my top positions. I've been buying a lot more at these lower levels. I now have 274,000 plus 50. I have 330 grand, over $350,000 in Google. You saw how it popped today. Before this, it'll go straight back up there. I've got a $400 price target on Google. And I know firsthand why, because I'm on YouTube. I know how much they're earning, and I know that this has got a great, great growth ahead of it, because they're now more profitable because of the eco data centers, which they are now allowed to build, and they're already doing it. So there's that. NVIDIA, I've been buying more NVIDIA. I've got $83,000, and we're down just 1% on it. I'm loving it because this has a $300 price target from Bank America, $250 from me. So it's been a great day today. As you can see, all my crypto is turning green. A $12,000 tax loss against the profit I've made. I am very, very happy with that. I couldn't be happier. And I bought more and I've gained more and I've still got some buying power, $1,500. So there is my position. I am up. I'm happy. We're down today at the moment, 9 grand, but it's going to bounce back quicker because what Jerome Powell essentially said in that broadcast before I bring Sensei on, what he said today was this: The American economy is stronger than we thought. GDP is expected to go up. And Donald Trump will announce any day. I wouldn't be surprised if it's by this weekend. We've won the war. We're out. What does it mean? Doesn't mean anything. But it will come out. The market will rally. He'll make loads of money. Everybody will make loads of money. The stock market will go up. Oil will come down. And there we go. That's all this was. It's a load of nonsense. You can call it bonkers and crazy. It is bonkers and crazy. But that is exactly what will happen. And you'll be glad you were in. This is not financial advice, but I am in. I'm about to make a lot of money on my XRP. I'm about to make a lot of money on my Ethereum. And I'm already making money now on my VU, Coca-Cola, Google, and Nvidia. I've made money on the previous trades. We're about to make even more on this lot. About 700 grand now invested. So there's my thoughts. There's my position. I couldn't be happier. Just give it a day or so. Let the oil thing finish. Let Trump say the war's won. And boom, I'll be at another all-time high. There we go. Right, we had 5 newsletters left, I believe. We're now giving away for the last 5,000 Luca coins. I'm bringing Sensei on. Sensei is going to take the lead for a moment. I'm going to take a break and allow Sensei to do his analysis and all this. He will also tell you about the newsletter, the training course. Also, Sensei, if you could tell the Discordians how you'll be integrating on Discord. After today's, when Sensei has finished his analysis, we'll both wrap it up together. I'll take a quick 5-minute break now and get a restroom break. When I come back, me and Sensei will do a quick Q&A. We'll go through some questions. If anyone's got any questions, we'll then tell you who won the 5,000 Luca coins. William, our admin, will update you with that later on. Sensei will give me the numbers and you'll get those coins plus the 50% discount, which includes the training course as well. Absolutely great. Sensei's going to take it away now. And while I'm gone, if you want to get Discord, you can do that. There is the link there. It's a couple of bucks. That's all it costs. And I give it to you. That's how we do it. And I will onboard you when I get back. And remember, send me a friend request as well once you've chose your membership. Diesel Raider, welcome in as our new member. Sensei, let's have a quick chat before I take you full screen. What's your general thoughts before you give us the deep dive analysis? What's your general thoughts there today and what you heard?
It was better than the market was anticipating.
Yeah.
The wording was better than the market was anticipating. I liked your analysis on it. I will give a bit more details in a second, but generally, then it was better than expected, but it's still not great. Inflation is still going up.
Yeah.
We still have all the underlying concerns that we've discussed before, and we both agree on some of the concerns we have for this year. But we can certainly have a rally, and we can sell into the rally, and there's opportunity always. And I'm going to be following your trades closely on Discord because I know you like to take profit if the opportunity does present itself. And I think we're going to have an opportunity to make some great trades. But the year is certainly there's still a lot of concerns I have for the markets.
Yeah, I totally agree with you 100%. But remember, the economy is not the stock market. It doesn't have to make sense to make money, folks. I mean, that's the way this thing is, I'm making a very bold prediction, and I think Sensei will probably agree with me, and please disagree if you don't. Trump will announce the war's over. And it won't be over. Lots of people will be dead. Lots of things will be blown to pieces. And Trump will say he's won, and that'll be that. And oil will go up, and the market will go up, and people will take profit. Is that morally wrong? Probably. But that's the stock market. That's what we do. That's what we do. We're not here to condone the war. I think it's bloody terrible. I wish wish it didn't exist. But it does. But this is how it works, folks. It's crazy, right? So, and I think we're going to see a nice bounce on crypto as well, because we were starting to climb there, and I was setting some trades around the 180s, 190s on XRP. I think we're going to go there quicker than you can imagine, and I'm glad to be back in and to get a benefit of a tax loss, because now I can just hold it and not really sell. I don't have to sell it and just own it for a while and take it to $5, in a year or two. That could happen, but yeah, Sensei's right. There's a lot more volatility on the market, but remember, The stock market is not a cash machine. It's not a casino. I have an income. You all have an income. You shouldn't even be here if you don't have an income. Don't use the stock market to go, I've only got $10 and I want to get rich on $10. And that's not how it works. If you have an income, and I have an income, Sensei has an income, you can buy now and then next month, for me, I get paid in 4 days' time. I'll be bringing that cash back in again and then reducing the margin. I was reducing margin today, but then opportunity presented itself. The Fed is more bullish than anticipated. We're going to get a rally. I can use the money next week when I get paid to just start paying off margin. Today was not that day. Today was take advantage. When crypto went down so quickly, not because of crypto's rubbish all of a sudden, it went down because of an oil shock. That's all it was. So I bought it. So there's my thoughts. Sensei, have we moved? There was 5 memberships left.
4 now. 4 available now.
Oh, 4 now. Okay, let me drop in the newsletter link right there. 50% off. Sensei will give me the names. We need your username on Discord, please. Send that to Sensei. And once we have that, I will then give you your 5,000 coins later on once I've confirmed that. But I'm going to take a little break. Sensei, I'm going to make you go full screen. I'll see you back in a minute for our final Q&A. And then we'll wrap this up. I'll be live on Discord after the event for Whiskey Wednesdays. Join me over there. But let me make Sensei full screen. There you go. I'm over there in the corner. I'm going to disappear in a second. Let me get rid of my tickers. There we go. Oh, should I bring them back? Is it better with the tickers on there? All right, there you go. I'll take myself off. I'll see you back in a minute. Enjoy Sensei's presentation, and I wish everyone the best. While I'm away, if you do go on Discord, I will onboard you. There's the link in the chat. Send me a friend request. Once you've chose your membership, I will onboard you. But Sensei, it's now over to you. I'll see you back in a bit. Thank you very much.
Thank you, Martyn. Okay, so let's have a quick analysis of what we've just seen there. Firstly, analyzing the SCP and the dot plot, and then the 5 biggest moments of today's event. So let me go full screen over here, and you can see me better. So the 5 biggest moments of this FOMC report. Number 1, the Fed cannot ignore the oil shock yet. The quote is, the question of whether we look through energy inflation doesn't arise until we have checked that box. This is Jerome Powell speaking about tariffs. So the Fed normally ignores oil price spikes. And I've said this over and over again. This was in my discussion with Michael Burry on Substack. He said it as well. This is short-term volatility the Fed will look through unless it causes issues they think is going to persist. So the Fed normally ignores oil price spikes because they are temporary. But Powell said they cannot do that this time because there is already an inflation problem from tariffs that has not gone away yet. Tariff inflation needs to come down first. Until it does, the oil shock is just piling on top another existing problem. 2 layers of inflation, not 1. So yes, they didn't change the dot plot, which a lot of analysts weren't expecting. They were expecting to change the dot plot to no rate cuts. That was a bit dovish. But what Jerome Powell said was very interesting. He says, yeah, we normally look at this, and this was my concern, and this is what I made very clear about inflation being a concern. He said, yeah, there is, normally we look through energy price shocks. However, we've got tariff inflation, and if you throw on oil shock on top of tariff inflation, that's 2 layers of inflation. That's going to push inflation possibly towards 3%. And 2 layers of inflation is a problem. So he didn't make it as clear as to say, look, this is just going to be a one-time hit. He didn't. So that's a concerning part. Number 2, I'm going to give you five here. And again, in the live chat, guys, I'm throwing the link for the newsletter. Next week on Wednesday, the final piece of the puzzle, the chart training course and the indicator is going to be released on top of the £5,000 training course, the net worth tracker, the daily newsletters. So there is 4 available. I'll update you at the end of this how many is. And Martyn's just said, anyone who gets it gets 5,000 Luca coins. Remember, the Discord integration is coming to newsletter subscribers, so you'll be on Discord as well, integrating with the Discord community. There is the link in the live chat. 50% off. There's 4 left. 4 left. Once it's gone, it's gone. Number 2, private sector job creation is effectively 0. He said that if you adjust for what our staff thinks is an overestimate due to overcounting accounting, there is zero net job creation in the private sector. He also said it does have a feel of downside risk. It is not a really comfortable balance. So he's saying the unemployment rate looks stable. And remember, if unemployment goes up, they might have an excuse to cut rates. But if unemployment goes up and inflation stays high, that's when you get stagflation, or I guess Jerome Powell doesn't like using that term, but that's what the market calls it. But only because the economy needs no new jobs to hold steady. Number 3, stagflation was raised directly. Remember, we just heard that, and Jerome Powell rejected the word, but described the thing. He said, I would reserve the term stagflation for a much more serious set of circumstances. So he doesn't like to call this stagflation. He's calling it what the 1970s was. He also said, what we have is some tension between the goals. Upside risk for inflation and downside risk for employment, which is what the market likes to call stagflation, something where the market will go into a bear market if it persists. Number 4, rate hikes were discussed again. The possibility that our next move might be an increase did come up at the meeting. This is Jerome Powell's quote from the FOMC we just heard. He said, the possibility that our next move, let me just make sure that's open over there. I apologize. Why is that not open? Yeah, we're good. So he said rate hikes were discussed. He said the possibility that our next move at the Federal Reserve might be an increase did come up at the meeting, as it did the last meeting. The vast majority of participants don't see that as their base case. So he's saying our next decision could be a rate hike. So that is Jerome Powell's own comments. He's saying we don't think that will happen, but he's certainly not ruling it off, and he's actually saying it could be. And then also Jerome Powell said, I have no intention of leading the board until the investigation is well and truly over. And he said, if my successor is not confirmed, I will serve as chair. So we could have Jerome Powell for a bit longer than we expected. We're expecting this to be his penultimate meeting. But if the new chair doesn't come in, he is happy to continue. A few dovish things from this meeting. One of the quotes was mildly restrictive or close to that. Current policy is on the borderline between restrictive or not, softer than expected. Number 2, longer-term inflation expectations are still anchored. The overwhelming majority of things we look to have been pretty solid, consistent with 2%. And he also said additional adjustments survived in the statements. The next move is assumed to be a cut, not a hike. A few hawkish quotes would be, if we don't see that progress, then you won't see the rate cut. The one cut is conditional on tariff inflation clearing. If it does not, the cut dies. 5 years, tariff shock, pandemics, energy shock. That's not the kind of thing that can cause trouble for inflation expectations. We worry a lot about that. Sorry, this is a direct, sorry, I apologize. This is a direct quote from Jerome Powell. Let me see if I can bring this on the screen. I'll bring it on in a second. So a direct quote from Jerome Powell. 5 years, tariff shock, pandemic, energy shock, that kind of thing. That is the kind of thing that causes trouble for inflation expectations. We worry about that a lot. So he is concerned that inflation is above expectations for 5 years. And then we had tariffs, and now we have war. He made a slight dig at Donald Trump, that essentially saying you keep causing inflation to go up and you're not letting me cut rates. I don't know if anyone noticed that. He then said hikes discussed at 2 straight meetings. Now we're starting to see the wording of hikes keep coming back into the discussion. I apologize for the lagging you might be seeing, or the drop in quality. It's only because we're streaming throughout to stream. So it's going to be better now because we're smaller. So those were the top 5.
On, mate. It's all good. I'm just onboarding everybody on Discord, but your information is fantastic, and I'm going through the newsletter as well, which is helping me decide my next position. So please carry on, Sensei. I'll take you in and out of full screen as the quality changes.
Brilliant. Thank you very much. So that was from the press conference itself. The final takeaway, the top 5 takeaways would be from this whole thing. 1, cut survived. Remember, we were expecting, or the market was expecting, that the rate cut that was expected for this year would be taken off the dot plot. That has survived. The market feared 0. The dot plot median is now held at 3.4%. It's a narrow range, has narrowed from 2.1 to 3.9 to 2.6 to 3.6. So right now, there is currently no rate hike expectations from anyone on the board in the dot plot. The inflation problem is now layered, tariffs underneath, oil on top. That is very concerning for PC forecasts and Jerome Powell. The Fed describes stagflation but refused to use the word. The hikes keep coming. The dovish wing is shrinking. Powell is not going anywhere, even if the investigation continues.
Breaking news, we got 2 memberships left on the newsletter, Sensei. 2 memberships left. And don't forget, you get 5,000 coins as well once you've given Sensei your Discord username. There is a link for Discord. There's a link for the newsletter. There are 2 left, 50% off, and you get the training course and everything else. Sensei, I'll hand it back to you. Just 2 left. They'll be gone in a second. Thank you, mate. Good luck. Thank you.
Thank you. So the final things I would say would be prepared for all scenarios. Right now, I am more positioned for the downside because I'm a bit of a longer term investor. So I am prepared for the downside, keeping money on the side. That is my strategy. You've seen other people's strategy. You've seen how Martyn's been winning recently, buying these drops and selling into big profit. I know I've been following Martyn's Discord and seeing some of the trades he's been making. As you can see, always on the screen, you can see how many times he's won, how many times he's lost, and that is incredible what we've seen there. So keep an eye out for that. I am preparing my long-term portfolio for a correction this year. I am getting ready to buy in. I have got utilities that I'm researching right now, consumer staples, getting ready for possibly a recession. That's how I'm putting in my £5,000 portfolio challenge. We are invested in healthcare industry, AI industry, and copper. So I will be sharing more of the £5,000 portfolio challenge. You can see more. I'll tell you about the 5 things you actually get inside the premium newsletter because there's only 2 left and I want everyone to have the opportunity. So just so everyone knows, right now we're running 50% off. It works out to about $9.99 a month. You get the daily briefings, the macro event cheat sheets. No, I can't put that on the screen. Daily briefings, macro event cheat sheets, premium only trading view indicators. That's a new addition. The chart course is coming next Wednesday. £5,000 portfolio challenge. The portfolio tracker plus the sort of the net worth tracker. The priority DMs. You can DM me one-on-one, and you get access to the new community we are joining on Discord. Martyn's Discord community. The newsletter community is coming over, and we're providing lots of perks on Discord as well. So you get all of that. 50% off. I think it works out to, here it is, $2.20. I'll put this on the screen. $2.29 a week, 33 cents a day, $99.99 a month. So you can lock in that rate. And once you're locked in, your price doesn't increase. But for anyone new who joins from next Wednesday, that price will be increasing. And there you can see all the indicators we're adding and all the perks. So go and grab it. There's 2 left. I'll update you in about 2 minutes' time. If those have sold out, you get 5,000 Luca coins as well if you join now. The link is in the live chat. 5 there. I'll also be sending out everyone a full debrief of the FOMC. All my thoughts and opinions will be coming out in about an hour's time for the FOMC.
Absolutely fantastic. Oh, hello. Look at this. Jacko's book.
Chico Villeco tipped MX $100 through Super Chat. Margarita for the dynamic duo.
Oh,
cheers from Cancun.
Look at that. Thank you very much indeed. So let's have a look at it, what the market's doing. So we sold our crypto. We got a tax loss, 12 grand. We bought back and we're up. We're up on XRP. We're up on Ethereum. We're not in Bitcoin and Doge. That is dust. So what have we got here? We've got the S&P now selling off lower. I've started to buy it back now. I'll just keep laddering down. Sensei's absolutely right. He's talking about a pullback. I've been saying there will be a pullback, maybe even a yen carry trade come September, October. But between now and then, end of March, as early as end of March, there could be a nice little rally. And if there is, I'm in and ready to take advantage of that. Yeah, I'm not a perma bull, just thinks everything goes up forever. No, I'm here to make money. And I think the Fed were more bullish than previously thought, but not like it's amazing. Just keep buying everything. I also want to give you another indicator that no one's mentioned here today. And it's something I said to Sensei in a message during the call. And this tells me a lot. Remember, I always like to measure you and how you're reacting and what you're doing and what you're buying. And it's why I don't share my trades online. I share them just for the private members on Discord and Electrum. I look at the way the media is reporting on the FOMC report. A year ago, if we covered the FOMC report, we would have 40,000 people watching us, and that was when we were under 100,000 subscribers. Now we're 112, need 113. Is that because me and Sensei are rubbish and no one likes us anymore? Well, probably. But if we assume not the case, we hope it's not. We're adding more, we're doing a better service. So what's going on? Why are we getting less views? Is it because less people are interested in the market? Yes, you've seen my music channel booming at the moment because people are watching more entertainment and more, this is entertaining I guess as well, but music, comedy, other stuff is doing better on YouTube at the moment, and financial channels are in a downturn. Is it just me? Am I just saying that? Am I making it up? Well, a few moments ago, I checked my competition to just see who is watching the FOMC report. How many people? I went into, I think it was Fox, what was it? Fox Business, and they've got a few million subscribers. They had 1,800 people watching. Meet Kevin with 2 million subscribers. He's a big channel. He had 10,000 watching. He's got 2 million people. And I went through and the numbers are really, really low. And when I did a little calculation of how many were watching us, and I'll show you on the screen, we've had 6,000 watch us. There's the number right there, with an average viewership of 12 minutes 59. For the size of our channel, we're actually on top again today. So we're actually doing all right. Now, why am I telling you that? And why is that important? How many people are watching the show? It's important because people are turning away from the stock market. Oh, it's doom and gloom. It's rubbish. That's why I am buying. So even though, it's not perfect and everything's not great, if it was perfect and everything was great, things would be a lot more overbought than they are today. All right. Everybody be buying everything up and Bitcoin would be 120,000 and all the rest of it. So that's why I'm buying. I'm looking at the value of the underlying asset and where it's going. And when people walk away and they don't watch and they don't pay attention and think it's boring and rubbish, is when I work harder. Hence why me and Sensei have been here since, I've been here since 6 o'clock this morning. Sensei did his breakfast show. We're live all day. We're working. We're earning money so we can buy the market, so we can share the information with you. And that's what it's all about, folks. So I think my prediction is this. We are going to get one hell of a rally. Does that mean we should just stay in forever? Nope. I shall be selling. Everybody will be buying. They'll be giving me their money. Even Sensei might be giving me his money because he's not in right now. He's holding back a little bit. But in a minute, he might get a bit excited. His indicator that he has, which is fantastic, by the way, in the newsletter, you get this indicator, which is proven to be very accurate so far. It might say, buy. Sensei might get excited. He might start buying because, things are, down at the minute, but I'm already in. What happens then? I start selling. Who do I sell to? I sell to Sensei. Bloody marvelous. That's what it's all about, all right? It's just a transference of wealth. There's not a wrong time. There's not a right time. When Sensei buys in, it will match his targets. It will match his analysis and what he's looking for and so on and so forth. We've all got different targets, different time zones and all the rest of it, and different understandings of individual assets and all the rest of it. There's not a right and wrong time. There's not a right and wrong way. If you'd bought the S&P in October and you sat and done nothing, well, you not made any money, but you haven't lost any money either. I sold at the top, bought it, traded Coca-Cola. You've seen me do it. Sensei spoke about all my trades. These are all my wins. Look over here, look, 233 trades, 227 wins. Today we sold on purpose. I wasn't selling because I was liquidated. I wasn't selling because I was margin called. I sold on purpose to get a discount on my crypto. And was I right? Yes. It's another win. 12,000 against my tax position. So now I've got more money to invest and I'm up on the re-entry of buying XRP and Ethereum. So that is another win in the game. I could sell that now and take a small profit and call it an actual win. It is an actual win on those trades. Overall, of course, I'm not up because we sold when we're down, but you get the idea. So there you go. I think we've got an exciting year ahead. Not going to get any rate cuts, maybe one. That's about it, which is what we've both been saying for a year. And I will sell into those profits like Sensei spoke about. But we're going to wrap this up in a second. If anybody, I'll tell you what we'll do. We'll go to members only for the last 5 minutes. You got 5 minutes, Sensei?
Yeah, I've got 5 minutes, and the two haven't sold yet. But what we will do is we will we'll promote it on social media. If they do, you can still get your 5,000 coins. So I'll keep an eye out throughout the day. If anyone does join, even once we end this, there is 2 spots available. There might be processing, there might be none, but there might be 2 spots available, and then we can. I'll just sort out after the stream.
Great, thank you. Let me know. Right, there's the newsletter in the chat. There's the Discord in the chat. There's the YouTube membership in the chat. We are now in members only mode. If you enjoyed this live stream, if you enjoyed it and you like to keep things live, you might want to do this right now. It's entirely up to you. Me and Sensei make the decision to do 99% of our stuff live. Even our videos we make live. When others will have a team editing them, we built the machine that builds the machine. We go live and we make videos from our lives. We think it's more important to keep it live, no AI, real. We're just sitting here talking to you, answering questions. And if you want to support live entertainment and live shows, if everyone did a 99-cent super chat right now, and today's show is split, you can kit Sensei's nursery out for his newborn baby, which comes along in about 3 or 4 weeks' time. Sensei's first little baby, and he's got everything. He's got everything he needs, but he needs more nappies. So if you want to join in the nappy fund right now, all right, if you want to do that, if everyone does a 99-cent super chat, 99 cents, it will keep this live, and you're supporting real live entertainment and live shows, and the money will go to Sensei's nappy fund, and he'll be very happy with that, all right? In a few weeks' time, he'll be counting every penny, let me tell you. So if you want to support us, that'll be great. After Q&A, which we're going to do now for 5 minutes, I'm going to be live on Discord doing live Q&A, video call-in. It's Whiskey Wednesdays. Everyone can take part. Here we go. There we go. It's a nappy fund. This is This Way Gaming has just done a $1 super chat.
At TH
Thank you very much.
Gaming tipped $1 through super chat.
Thank you very much indeed. I will mute it just for a moment so we can do the comments and questions. And if you want to support live entertainment and you want to support Sensei and what we're trying to do here, then fill your boots. That would be great. We'd appreciate it. Right. So we're going to do live Q&A. Then we're going to go to Discord. Sensei will update me. If you are a member on Discord, there are 3 people actually going through the interview process that haven't chose their membership. In a few minutes, when this ends, I'll be kicking you from the server. If you have to choose your membership, what you want, it protects the server and protects you from yourself, if you know what I mean. So before we go, we're going to do some live Q&A. We are now in members only, so let's do some live Q&A. If you've got a question, a comment, you want to know something, now is the time to ask. So let's go for the questions. So, Komatsu, let's have a look what you're saying. They're going to be well in the coming months. SpaceX passed 10,000 active Starlink satellites. Oh, another one, always winning. William Bond, our admin. That's very kind. Our admin, loving it, loving it, loving it. Hey, William Bond was the guy who told me today about the tax advantage by selling crypto. And then we got about 50 people in our Discord server. Everyone did it. We were responsible today for crashing XRP. You can thank the Discordians. Yep, there's about 50 of us who sold it today and then bought it back straight away. It was amazing. That was the power of family learning stuff. I didn't know about that, and then we researched it, we verified it, it was right. William was spot on. Oh, look at this. We're getting some more super chats coming in. This is from Francis Kerr, who says, sleepy. We're all exhausted, mate. We're all exhausted. Look at crypto starting to go up now, by the way. Look at this. Starting to go up. We're seeing it. We're seeing it go up just a little bit, but hey, I'm loving it, loving it, loving it. I'm okay with that. Right, let's go through comments and questions. Let's see if Sensei can ask some of these. So, SpaceX passed 10,000 satellites now. IPO rumored for June. Thank you, DJ Hayes, for that one. There will be no further interest rates cuts this year. Maybe one. That's what I've been saying for a whole year. And the price to earnings ratio of all stocks will fall back to 10 to 15 times. Do not agree with that at all. There's no evidence to support that whatsoever. I don't agree with that at all. 100% Delish, thank you. Well, you advertised too much, said Terry. Okay, I'm not sure. Do we? I don't know. All right. Nothing has changed here yet, says RW. Tiga's channel is for real investors. Tiga's channel is for real investors. Okay, not sure I know what you mean by that, Robert. Hey, Sensei, did you change your mind yet about me buying a signed XRP mug? What's that all about, mate?
No, I haven't changed my mind.
I haven't changed your mind.
Asking for like a signed mug. I'm sorry, Ant.
You haven't got it yet, have you? No, we'll get that to you. Don't worry about that. Have a great day, RW. Thank you for that.
I'm not sending him one. I'm not going to send him one. He's been asking for a signed mug.
Oh yeah, it's not free. No, if you want a mug, go here. Here's the link: martinlucasshop.com. Buy yourself a mug, and then if you want a signed one from Sensei, we can sort it out for you. But we're not going to just send you one. What do you think this is? Anyway, this channel is for real business people. Robert Elliott. I'm 1 minute. I'm confused, Robert, what you're saying here. But thank you very much. This channel is for real business people. What does the 8888 stand for? Anyway, Brent crude is back up to 110. Yes, it's going to spike, and then all of a sudden it's going to be over. This is my prediction, right? We like Mr. Sensei so much. I think, love Mr. Sensei so much. We buy him margaritas. Jacko, I'm loving it. I didn't interpret this as Martyn did. I think it's more bearish. That's fair enough. You can absolutely do what you want. Maybe you want to short the market. I never short markets, by the way, or do options. I have limit orders in at prices much lower than this. I don't have time to mess with small dips like this. Well, you know what? The small dips made me all my money. Those small dips on Coca-Cola made me 40 grand, by the way. But maybe that's nothing. I don't know. Hang on a minute. I think we got some more guests coming in. Come up in a second. What have we got? Have we got any more comments? I want to know what Sensei thinks about Canton Network. Oh, let me read this one out. What's this one say?
_Menorca tipped 50 check run through Super Chat.
Wow.
To support you, not the nappies. Check the reusable ones. Less garbage into the landfill.
I agree. I told Sensei about that. When I had my two boys, we had terry towel nappies. Told him all about it. He'll soon do it. He'll work it out that he can't afford these Pampers. He'll soon do it. Don't you worry about it. He'll soon do it. Sensei, what do you know about? What do you think about Canton Network? Any thoughts?
I haven't looked into it enough to give an opinion.
No, I've got no idea either. William Bond says, loving it. BATO oil, good buy, sell tomorrow, says Jano. SOS limited stock, good or bad, was 60 grand at one time. Is it worth a review? You can tomorrow, I'm doing an Electrum event where you can select what stocks you want. Taking a little loss on Coca-Cola today. Are you? Remember, hang on, before you take a loss, remember, I don't sell for losses. I sold and bought back straight away for a tax loss, but I didn't sell for a loss. There's a big difference. Remember, if you sell Coca-Cola for a loss, it's not a tax loss unless you wait for 30 days to buy it back. So if you sell Coca-Cola and think, I'll just take a tax loss and then buy it back, it doesn't work. That only works on certain crypto, and XRP and Ethereum, we've confirmed, do. So be careful thinking I'll sell Coca-Cola for a loss, bank a loss. No, what you've actually done is lost money. And if you buy back, you've just lost money. That's all you've done. All right. Okay. So, what else have we got? XRP boom. I think it will go up. Certainly. I think we'll get a bounce. I'm already up on it, which is nice. Maybe the different time zones affects the views, Martyn. They do. Absolutely they do. The new time zone does affect the views. Not this time of the day so much though, but yes, it does. But again, it's not just for us, it's for the whole investment sector. 40 grand plus the dividends. That's right. I forgot. I made more money. Oh, hang on. Defense. What is he saying?
A Defense 89 tipped $2 Canadian through Super Chat. Love it when you show your trade live with us.
You love it, do you? Well, there's been loads of trades today, and we've been giving away coins for those that have been posting it. So no, you're right, Martyn. Too busy at work to trade is what. Oh, I see. So you would be, but you're just too busy. That's fair enough. Another one, 1970 Buckley. Oh, look at this.
1,970 a Buckley tipped $10 through Super Chat for the Nappy Fund.
It's the biggest super chat of the day. Is anyone going to beat 1970 Buckley? I think that's a whole packet of Pampers right there. Lovely stuff. Thank you indeed. I buy and sell tiny trades. Oh, you do. You do. We are in agreement. There we go. That's why we discuss it, right? So, Sensei, doing well here, mate, for the Nappy Fund. This is bloody marvellous. Right. So, listen, folks, we're going to wrap...
no desire to switch to the environmentally friendly ones, unfortunately.
No.
I'll stick to the Nappy.
He's sticking with the Pampers. There you go.
I mean, if you think about it, how much carbon fumes was blown up today when they bombed the oil fields and gas fields? Do you know how bad it is for the environment, methane gas? It's probably the worst thing. And then they're telling us to be careful with like those straws that are made out of paper because we're going to save the environment. I mean,
yeah, when you put it in, when you think of it like that, yeah. Mind you, Sensei, you ain't seen how your baby's going to poop yet. It's serious.
That's
right?
why I don't want to wash it out and put it back on it.
Yeah, it's like a little explosion, mate, when that happens.
I don't want to wash it out. I just want to throw it in the bin and put a new one on. As long as I can afford it.
You wait until your baby...
If the markets go down...
You wait until your baby does The Exorcist. Have you ever seen the film The Exorcist where the snake comes out? Right? That actually happens to a baby. It happened to both my kids because when they're newly born, right, their stomach's full of all kind of acids and chemicals because they've been inside Jodie for a while, right? They're all kind of a little bit mixed up, right? I mean, imagine it. You're swimming around like that for 9 months. You're a little bit messed up. When you come out, right, a few days in, all of a sudden your baby does what's called a projectile vomit. And it is like a flipping... like a hose pipe. It's like a perfect round tube. It goes like a snake. You think I'm joking? I'm not. Both of my kids did it. It's like you're holding your baby. Oh, I love my little baby. In my little baby, amazing. Like that, all over you. Suddenly you go, can I send this back? I don't like this, babe. Jodie, can you take this back? You got that to come, mate. Oh, God. You'll be sending me pictures about it. It happened. Did it happen? It happened today, Martyn. Right. Anyway, you look at his face. Look, he thinks I'm joking. Right. So look at this. We got another one here. We got Francis Keir. Add this to the two previous so I can win. Okay. All right. Francis Kerr. Here he comes. He's got a number 2. I tell you what. Who's number 1 today? Who's number 1? Shall I do it? Who's number 1 crown?
Francis Kerr tipped $2 through Super Chat. Add this 2 to the previous 10 so I can win.
Right. Number 1 crown in the chat is Jacko Valaco. He's number 1. Francis Kerr is second. I am going to give away, just because I'm in a good mood today, right? We've had a good show today. It's been a lot of fun. I'm going to give away, is William watching? Yes, he is. I'm going to give away 5,000 Luca coins. You ready? For whoever is number 1 at the end of the show. And the end of the show is in the next couple of minutes. Whoever is number 1, you've got to be on Discord. If you're not on Discord, you can't get it. All right? So you've got to give us your Discord username in the chat so we know who you are. If you're not on Discord, you can't get it. And it's whoever is number 1 at the end.
Quick, super chat.
Yeah,
whoever wants to be number 1 needs to super chat.
Well, you don't have to just super chat, all right? There's all sorts of ways you can win it. Super chat does give you points. It's about liking, engaging, commenting, and super chats. Whoever's number 1. So Francis Kerr is number 2. 1970 Buckley is number 3. And she's done 2 big super chats and she did memberships. So whoever's number 1, what you do in the chat, click on the top fans, or click on someone's crown and it will tell you. Click on someone's crown and it will tell you Jacko is number 1. So he's got 623 XP points, okay? So by the end of this, in the next couple of minutes, whoever's number 1, if you're on Discord, you've got to give me your Discord username. in the chat, you will win 5,000 Luca coins. So, has anybody got any more questions? It doesn't look like anybody's got any questions for me. Anyone's got any comments for Sensei? So we're going to wrap this up. You got like a minute to go. I'm going to, if no one does it, Jacko will win 5,000. I'm going to go into Discord in a minute and we're going to do our Whiskey Wednesday. I'm going to grab a whiskey and we're going to talk about the show. We're going to talk about the stock market and all the rest of it. Oh, hang on. Kimberly, Nappy Fund, $5. There we go. Oh, Jacko is still number one. You can copy and paste. You can do all sorts.
268 tipped $5 through Super Chat.
Oh.
Nappy's Fund.
Oh, hang on a minute. Brandon Bailey has just come in with a 1-year badge. They didn't get a crown. Hang on. Jacko is number 2. Jacko has slipped to number 2. Who's number 1? Who's number 1? Brandon Bailey has gone into top spot.
Bailey, 4,326
Brandon,
$19.99.
Brandon,
Super Chat. I want to be the winner.
You are now, you're going to win 5,000 coins. I'm loving it. Brandon Bailey has gone into the lead. Remember, these coins you can trade for privileges, unlock certain channels. There'll be times when we'll give away a membership in a newsletter or a training course or merchandise, all kinds of things you can trade in for your coins. This is great. We should probably have a countdown. Have you got one of those countdowns, Sensei, you could put on the screen? Yeah, Robert Elliott. Robert Elliott's gone number 1. There's the 5 minutes, Sensei. 5 minutes. Robert Elliott has now gone into number 1. Baby. You can copy and paste. You can do all sorts.
$10 through Super Chat.
I'll tell you what.
Smiling face emoji.
I'll tell you what we'll do.
Hand emoji.
I'll tell you what we'll do. It was St. Patrick's Day yesterday. So let's bring on the funky music. Here we go.
Robert Elliott's number 1.
Who's gonna win? Who's gonna win? Who's gonna win 5,000 coins? Here we go on the show with me and Sensei playing. Who's gonna win? Who's gonna win? 5,000 coins. 5,000 coins. Who's number 1? Robert Elliott is number 1 right now with 3 minutes and 55 seconds to go. When we get to 0, it's all over. Who is going to win? We got Defense. Defense is now in 3rd place. Defense is now in 3rd place. This is hilarious. I can't believe it. Do you know what? I'm so excited. I'm so excited. I'm going to dance around the studio. We got 3. I am.
Sorry, everyone, you have to witness this.
Oh my God, yeah, sorry about it. Who's number 3? Hang on. Brandon Bailey. Oh, Brandon Bailey's now number 3. Brandon Bailey's number 3. Robert Elliott. Oh, Robert Elliott's number 3. Hang on, it's shifting quick now. 3 minutes to go. Who's going to win the 5,000 coins? Who's going to win? It's Brandon Bailey is at number 1 with 2,000 XPs. Robert Elliott with 1,300. It's changing quickly now. We've got 2 minutes 47 to go. This is crazy. This is absolutely mental. This is mental.
Jacko got kicked off the list.
Brandon Bailey is number 1 with 2 minutes 35 seconds to go. I'm loving it. Right, let's have a look at the stock market. XRP is down a little bit, but we're still up on it. Ethereum is down 0.33. The S&P is selling off. I'm going to buy some more. I'm loving it. Coca-Cola is holding. Google is holding. Nvidia is taking a bit of a dip, but it will come straight back, I'm sure. My birthday was yesterday. Happy birthday, Robert. Happy birthday, mate. Happy birthday to you. Yeah, happy birthday to you. 2 minutes to go. Who's going to win the 5,000 coins? Who's it going to be? The person now in number 1 spot. Robert Elliott and Jacko are catching up. Brandon Bailey is now number 1. He can be caught at any moment. Any moment in the last dying seconds, it could change as quick as that. I'm loving it. Oh my gosh. I'm going shopping. I'm going to buy the S&P 500. Watch. If you screenshot this, you can Look, if you screenshot this, you can win some coins in the Discord. Ready? Here we go. Live on the show, the S&P 500. Don't do this. You should never trade like this. This is very risky stuff, but I'm going to do it because I just don't care today. I'm in a good mood. $1,000, 1,100. Boom. Review. Are you ready? 3, 2, 1, go. There it is. 1,100 at 607. It's gone straight up. I love it. Oh, hang on a minute. What the heck has happened here? What's happened here? What's happened here? 1,000? Oh my God! And you're number 3. Number 3. The S&P. Oh my God! I can't believe it. 37 seconds to go. 37 seconds to go. Jacko is number 1. Jacko is number 1. He's number 1. We got 30 seconds to go. Here we go. Here it comes. 25 seconds to go. Who's going to win the 5,000 coins? Luca, margaritas, and whiskey. We'll have the whiskey in a minute. We're counting down. We're counting down. Here it comes. We're counting down. 10, 9, 8, 7,
7, 6, 5, 4,
3, 1,
2,
6, 10.
1.
Ray!
4, 6, Jacko!
Is it Jacko? Is it Jacko? It is Jacko. Jacko is number 1. Jacko wins the 5,000 coins. Is absolutely mental. And in a minute, I'm going to grab my whiskey for Whiskey Wednesdays in Discord. So let me put this on the screen. Jacko, is William Bond in the chat? Yeah, William Bond is here. So, Jacko, can you give me... Are you here, William? Yes, you are. Jacko, can you give me your Discord username, please, so we know who you are on Discord? Drop it in the chat. Drop it in the chat. That was hilarious. Jacko, give me your number 1. You've won 5,000 coins. William Bond is going to do it now, but he needs to know your username. He needs to know your username. All right? So, what's your username? All right? I'm looking for it now. I need your username. Hurry up.
Imagine he says, I'm not on Discord.
Oh, my God. Can you imagine? Is he not on Discord? Oh, no.
You'd have to sign up.
That'd be hilarious. That'd be hilarious if he's not on Discord. We've got more people just joining, actually, in the last few minutes. Let's have a look.
I'm sure he is.
Let's have a look.
Yeah, he is. He is on Discord.
Jacko Valaco. Let me have a look. Let me search for him. Okay. Let me go and search. Hang on. Members. Here we go. William, can you take care of this, mate? You should tell me how to do it. But he doesn't want me to know. He doesn't want me to know because... Oh, there he is. He's old. Yeah, he doesn't want me to know because I might start stealing coins. How do you steal your own coins, though? That's not possible, is it? Jacko Valaco. There he is. Yeah. There he is. I see him. All right, so I'm going to keep that up there. Jacko Valaco, we've got you. Yeah, is William here? If William says he's found it, I'll tell you what I'm going to do. I'm going to go there. I'm going to copy and paste that. I'm going to message William and he'll give you your coins. Don't you worry about that. Don't you worry about that, mate.
Don't spend it all at once. Careful in the casino.
Yeah. I tell you what, you need to go and do rock, paper, scissors. You need to go and do rock, paper, scissors and put all the 5,000 on. All right? Oh, you can't do that now, can you? We took the limit away. We made it small again. So at William, here we go. Can you add 5,000 coins? Okay, here we go. To Jacko. There he is. There's the boy. There's the boy. All right, Jacko. I've sent the message. William will confirm. Oh, the S&P selling off now. Very nice indeed. I can't buy anymore. Got to stop in a minute, right? Can't keep buying all of it. How much?
I'll start buying soon. Give it another few percent. I'll start buying.
You'll start buying. This is nice. This is nice. This is nice. We are gonna get a bounce back, I'm sure. Especially when that war ends, it'll just suddenly end, and it'll be middle of the night. You'll be asleep in Sensei, and you'll wake up and go, hell, the S&P's up 10%. I've seen it so many times. Right, okay. Right, we got to get out of here. William's done it. William is on it. He's already tapped the like button, said, yeah, Martyn, I've done it. He's done it. Right. Okay, thank you, William. So I'm going to go in Discord right now. I have Whiskey Wednesdays. Give me 15 minutes. I just want to have a quick sandwich, and then I'll be right back. I'm going to grab a whiskey. Join me for a debrief after all of this. Sensei, thank you for your time today. Absolutely brilliant. The newsletter was great. It enabled me to understand more than what I knew before, which is hard to do, really, because I know a lot, right? And reading the newsletter, I now know more.
That's a big compliment.
I know. Yeah, I know. It's a massive compliment that I was able to learn something I didn't know, right? I now know more. And then with William telling me about the tax thing with crypto, the fact you can just buy and sell it instantly, that's like, well, that's brilliant. It's not. Do you agree what I'm saying, Sensei? Morally, I don't think that's right.
No, I don't know.
Because you can't do it, can you, in the UK?
I wish we had it here in the UK, to be fair.
Yeah, but I mean, it's nuts.
Tax year soon, so we could sell everything and then the next day buy it again. We can't. 30-day bed and breakfast rule.
You can buy it the same second. So you never have to lose, right? Anything. Wherever your crypto is at any point in time, right? I'm down at the moment, so you just sell and buy it back at the same price. And post that as a loss. So all the money you make, you'll never pay any tax because you just keep losing all the time on paper. It's ridiculous, that.
Yeah. Yeah. No, I wish we had it here because every year our allowance resets. So if anyone's here from the UK, you've got about another 12 days until the tax year ends. And if we had it here in the UK, we've got about 3,000 allowance now. It used to be 12,000. I could just sell anything I have in profit for 3,000, sell my losses, and then buy back, and then I'll use my allowance, and I've got some losses I can put forward. It'll be great. So lucky you if you can do that in the US or wherever your jurisdiction
it's not right.
is.
I don't agree with it.
An accountant,
I don't agree with it. I think everyone should, because if you've got average Joe, and this is what this channel's about. If you've got an average person, right, on a minimum paid job, he works minimum wage. He's got no money. He's just surviving, paycheck to paycheck. He can't buy crypto. He can't do all this. He's just barely surviving, right? He's not even in this world. He pays taxes. No way around it. Whereas somebody with excess money, who earns more money, can buy crypto. The poor guy with minimum wage, he can't buy it. The poor guy can buy all this crypto, speculative asset. When it goes down, sell it, buy it back the same time, then it goes up, and then he doesn't even pay tax on it because he posted it as a loss. I mean, the rich get richer and the poor get poorer. It's not right. I mean, I like capitalism and I like investing. Obviously, I'm on the stock market, right? But doesn't seem right to me that some people can do that. That don't seem right. But anyway, we should all pay our fair price. We should all pay taxes. Otherwise, there's no system, is there? If we're all just sitting there at home with all our money, there's no stuff get built. You need stuff. You need money in the system, don't you? Anyway, I don't know.
That could be a long conversation, couldn't it?
It could be. Anyway,
we're
off.
That rabbit hole.
Yeah, I know. That's it from me. I'm done. Thank you very much indeed. I'll see you all back in a bit. I'll be on Electrum on Discord in a minute. Give me 10, 15 minutes. Congratulations, Jacko. Thanks for your support, Sensei. That's amazing. All that support there for the live shows and the Nappy Fund. And we ended up.
Sorry to any environmentalists. I'll continue with the nappies. I've got the money's coming in. Thanks to you guys.
Yeah, I know. Right, that's it from me, guys. Thank you ever so much, Sensei. Tremendous job. Sensei will update you that when we left it, there was 2 newsletters left. If you do get a newsletter, make sure you send Sensei your Discord username to get your 5,000 coins as well. You don't want to miss out with that. And any day now, you'll see Discord. You'll see all the newsletter, the channels. You'll see Sensei chatting with me and in the server and special events. And so when you watch the newsletter in the morning, you can discuss it with everybody, tell everybody about it and what your experiences were. We'll have debates, we'll have polls set up. Do you agree with Sensei's point this morning? You can come into the on-stage events, debate things, see all our trades live, all that for a couple of bucks, and you can get the newsletter as well for like 20 cents a day. Absolutely incredible. We're trying to provide the best value service online. That's what we want to do. So Jano says, nice, Martyn, you're a good man. There you go. I like making money, but I just think it should be a bit fair. If one person can do that and the other people just can't do anything, it doesn't seem right, does it really? Anyway, that's it from me. Have a lovely, lovely time. I'll see you back. Have a lovely time. I'm just making shit up now, aren't I? Have a lovely time, everybody. I'll see you on Discord in a minute. Sensei, you're back in the morning for the breakfast show. Go and spend some time with your wife. You've been on air all day with me today. It's been absolutely fantastic. That's it from me. Thank you ever so much. Let me make sure that this takes you to the extra channel. I'm sure it does. Let me just double check. We replay.
Oh yeah, and anyone who's got the newsletter, sorry, Martyn, I was just going to mention that there's going to be a debrief. I'm just going to quickly spend half an hour debriefing, getting all the information, and sending you everything you need to know for today's FOMC.
Oh, so there's another newsletter coming out. Oh wow.
I'll send it out.
There you go. That's value for you. That's value. See, if I'd read that, if I'd waited and read that, I wouldn't have bought the S&P. I'd have waited, wouldn't I? I would have bought it. I'd have bought it later on. I bought it too soon, didn't I? You got to read the newsletter. I've not read that yet, right? So here is the extra channel. This is where we're going live right now. As you can see, we're replaying what you've just missed. There is the S&P. There is Jerome Powell talking live. You can watch it back if you missed it. People tune in different times, different time zones around the world. So there you go. Let me give you the link right now. Here we go. Live now on Extra. I'm out of here. Pin that to the top. I'll be on Discord in about 10 minutes. That's it from me. Thanks, guys. We love you all. Thanks for joining us for another FOMC report. Eventually, we'll have 100,000 people watching again when the market's booming, and all of us that were here when it was bad with all our investments will make all the profit. They'll be buying our stocks and we'll be selling it and going, you can have this, mate. Have it. That's it from me. Take care of yourselves.
And each other.
That'll do for me.